following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. We're kicking into fall, folks. You wouldn't know it in Florida right now, though. We get another few weeks. Get a few degrees cooler. Don't make assumptions. Ask for what you want. This is a great card. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. And likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials down 62. NASDAQ is up 11. S&P's down 4.5. Gold contract flat, $12.05 an ounce. Silver, $14.50 an ounce. Light sweet crude, $72.32 a barrel, up 24 cents. Notes and bonds. You get the 10-year note down 5 ticks, trading 118.15. 30-year bond off 12 at 139.28. King dollar down 60 ticks, trading 93.715. The euro is at 117.67 to 1 US dollar. The yen is trading out at a price point of 112.95 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We're laying out here, folks. This market just wants to know what's in that statement tomorrow. Bottom line, you are down 28 cents. You get anemic volume on the way down. So this baby still wants to test its highs. The SPY is down with 28 million shares. That's anemic. We had gone topside last week with 100 million. And then on Friday, which was, sectors getting rearranged, we did 105. You're trading at 290.74. Bottom line, it still looks like it wants to go out and test that high. NDX 100. We take a look at the 3 Qs. What do you have with the 3 Qs out here? They're trading sideways. Now, this is where the differential is with the Qs, which is pretty wild. Yesterday, what we had is this. Yesterday, the NDX 100 went up as the Dow Industrials S&Ps went down. The NDX 100, as well as the NASDAQ Composite, rejected lower price. Bottom line, they went topside. They all, the FANG stocks, Amazons, Googles, Facebook, Netflix, Microsoft, they all did the same thing at the same time. That being said, this is what you had. We went to a lower low with 34 million shares, rejected it, went from 181 to 183. You're coming into the September 5th downdraft. Today, now you can't catch a bid. You don't have buyers. We got over this high. The high we're talking about is 183.96. Went to 184, and you get anemic volume. That setup there is still saying, hey, guess what, man? This 5th of September is proving to be a problem inside the NDX 100. That's where the sellers are lying. And if we go take a look at the index in general to see the strength versus the weakness, you got NetEase is up 2.9%. Workday's up 2%. You get Liberty Media up 1.9%. Taken away from it, you have Microchip Technology. That's down 4%. You got Mercado Libre down 3.8%. You get American Airlines off 3%. And you get Maximum Integrated down 2.9%. I suspect what the problem is here inside the NDX 100 as well as the composite of the SMA is the chip business. The chips folks have taken the NDX 100 up and they've taken it down. And what you get out here today is just no strength inside the chips. The chips also are coming into a downdraft from June as well as the downdraft from September, and it can't handle it. So I suspect we're going to get into lower price. Notes and bonds. Let's go take a look at notes and bonds. The notes and bonds, those babies, they're sitting at their lows. You had the 10-year note today down 5 ticks. We're trading at 118.14. Bottom line, can't hold price. We have a million contracts. That's not a huge amount, but bottom line, it's not holding price. Right now, the 10-year yield is at 3.096, and I believe for the year it's 3.11. That has been the high thus far. Yes, it's 3.111. So bottom line, we're right next to that high yield for the year. 30-year. 30-year is in a different situation. And what it is this. The 30-year coming into its August swing low, we've been down here 5 days. We got today to 139.17. We're at 139.29. And anything above 139.23 is a rejection. We certainly have light volume. There's only 252,000 contracts. If we do take this, and I put this on the continuous contract for you, what you're going to see is that you're not only rejecting the last 4 days, but as we bring this over, you're going to see that we... this is interesting, actually. Well, it's a continuous contract. Well, the bottom line is it has to get back inside 140.05. You know, you're outside of that right now. The differential in the continuous contract is a bit. So, all right, we'll see where it shakes out. Bottom line, though, rates would make sense that they are going up. Bottom line, what we have had is that there's been more demand than supply inside that bond market. King dollar. What do we have with King dollar? King dollar tried to get to a higher high today. Can't handle price. King dollar got up to 93.960. Came off that level. So what you actually have here is that we had sellers last Thursday. Last Thursday, we broke lower. You had price spread. You had volume. Today, you try to get higher, have light volume, hasn't been able to hold price. That's saying that it wants to get down into the monster strength that it had on the 14th of June, which was 92,500. So when you start looking at those setups, the bottom line is that it looks to me like notes, currencies, gold, market, they're all waiting for the good old Fed statement tomorrow. And the way that the S&P is setting up, it looks to me like that is going to be a dovish statement. The reason I'm saying that, it looks like the S&P does want to go test the high. Bonds is a toss-up. 30-year looks like it wants to reject a lower price. King dollar looks like it wants to go south. And if that's the case, that's going to be a dovish statement coming out of Powell at 2 p.m. tomorrow afternoon. Our phone number is 877-927-6648. Dow Industrials are down 60. NASDAQ is up 12. S&Ps are down 4.5. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now down 67. You get the NASDAQ up 11. S&Ps are down 5. Let's go take a look at the banks. The XLF, that may give us a slight clue as to where the spread and the rates are. And if we take a look at them, what you're going to see, the XLF had broken topside last week. Bottom line, gave it up. Now, you are pulling back with lighter volume today, but bottom line, you are back in the lower range. Once we got back inside the 2856, that gives you the lower range. If we put this in a weekly, what you're going to see is you're slamming right into your downdraft. From February of this year, that was one monster downdraft. We went from 29 to 26. You did 6.9 billion shares. Bottom line, we came into that last week with 282 million. Now you're backing down again. We go take a look at JP Morgan. JP Morgan out here. That's inside the lower range again. JP Morgan looks like it wants to run back to the 112 area. You're at 116. We take a look at Bank of America, BAC. Same setup. But actually, Bank of America actually never broke out. You know, Bank of America got to a price point of 31.37. Last high was 31.79. So the banks basically also are saying that the statement more than likely will be dovish. If we do take a look at the Fed Fund futures rate, this is how it stands right now. You get 100% probability that we're going to go up on rates tomorrow, 2 p.m. You have, well, actually, it's 99%. That other 1% is that you're going to go up by 50 basis points versus 25 basis points. 50 basis points is a half a point. The November 8th meeting, that's the next meeting, your probability is only 3.6%. You're going to get an additional 25% basis points. December 19th, though, you're up there. December 19th, you're at 73%. And then March 20th, you're at 46%. It seems that the way this is set up on the Fed Fund futures is that it's every other meeting. What Powell has done for 2019 is that he has set up a news conference for every meeting. So there will be no dead meetings inside the Federal Reserve this coming year. We go take a look at some of the higher volume stocks. We've been talking about GE, so let's just go look at GE. GE, dead dog, folks. GE's got some huge problems. This baby, and this is, you can learn a lot about high volume lows, high volume highs. Bottom line, they like to get down to them. You know, GE in 2009, traded down to $5.72. Did a nice counter trend bounce, got up to 33 bucks. 33 was the high 2 years ago, July of 2016, and here we are at 1128. 1135 was the number, folks. 1135 is the high and the low. If we bring this closer, what you're going to see is that where you get a break, it's a break with big volume, and I'm going to just take the most conservative stance on the ABC structure on the way down, because you can see this has been going down in a huge way. There's no two ways about that. But if I take the most conservative stance, your A point out here would be $14.43. That's the high of June. Your B point is $11.94. So you're talking approximately $2.49. Your C point is $12.98. So let's say 13 bucks. That gets you down to $2.49, I said, right? Yeah, so it gets you down to $10.50. Now, what you're going to have here is this. At $10.50, it really is a toss-up if it can get out of here. And this is what I mean by that. The low of the bar is $5.72. The high is $11.35. You know, $10.50, that's only 75 cents in the bar. That's not the end of the world. If we get like $1.25, $1.30 into this bar, really get out of the way, because then it is monster trouble in paradise. This thing will get cut in half again, going down to $5.72. That's the technical setup. The fundamental setup is that I suspect when all said and done, we're going to see that good old GE's been cooking the books for years. Bottom line, they have legacy issues out here. They're on the hook for billions of dollars, and it's trouble in paradise. And that being said, what you're going to see is that this is a company that has been contracting in a huge way. It did $148 billion 4 years ago. It's going to do $120 billion this year. They're claiming they're going to do $122 next year. We'll find out if that's the case. And what we don't know is that what are they still on the hook for? That's the big if. XLE, rather. Let's go into the, well, here, first let's go into the oil. So the oil is taking off like a rocket ship. We have the crude oil, it's up 0.25% today. We are $72.25. We're going to have the API numbers come out after the close. If we do look at this on a continuous contract, we bring this up, it looks like, you know, you're already into this bar from the downdraft. The downdraft in July was that we were at $74. We went south to $70 in 1 day. Bottom line, you're at $72.26, and it was just like what I was talking about in the aspect of when we were just talking about GE. You can see that this bar, we're into this bar in a huge way, so your probability gets higher that you're going to go to the top of that bar. Now, that being said, what you do have is this. If we go take a look at the XLE can't handle price. And the XLE, the sellers are just sitting here, and they're sitting here where they had that downdraft come in May. Bottom line, May, we went down from $79 into the $73. You had volume. We did it again in July. And that's where that baby is laying out. It got into the gap from July. That was $76.94. We went to $77.01. Can't handle price. If we go take a look at the two largest weighting structures, it would be Exxon and Chevron. Exxon's trading $86.52. Exxon did break over its highs. That being said, however, Exxon is coming into this vicious downdraft from July, where we went from $89 down to $73 in 2 days, and it was monster volume. Then it has an additional one. That was June. Yeah, no, that was February. Then the prior June of 2016, same type of setup. So the sellers are sitting right at that level, and Chevron has been weaker. Chevron is trading 123. You're down from this high of 131. You're coming into, yeah, same downdraft. That February downdraft was vicious. So Chevron went from $133 down to $108 in 3 weeks. And you're coming into that, and that is monster volume. You're talking about 45 million. Even when we had a good week last week, we only did 34. and you'll see what we do this week. But bottom line, you're coming into some nasty selling inside that market. It's all about supply versus demand. And in this particular case, when you start putting that together, it's saying that somehow maybe the oil market goes up by another couple dollars, but that's going to be about it. And I suspect we're going to get a pullback. We will have these API numbers coming out for you at 4:30 this afternoon. And of course, the run on oil is all about Iran. You know, not all about Iran, but that's one of them, because there's going to be a huge amount of supply off the marketplace that basically is spooking the market and saying, hey, you're gonna pay up for the oil, we're going to pay up for the gasoline, we're going to pay up for the heating oil. Dow Industrials right now are up 54. NASDAQ is down 14. S&Ps are down 4. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at Nike. You know, what is going to happen out here after the close, folks. At 4:15, right when the futures close, Nike's going to come out with numbers. And what they're looking for out here, number-wise, is that they're looking to take in $9.9 billion, and they're looking to make 62 cents a share. The low for the year in Nike is $50. The high is 86. Right now, you are at those highs. This is going to be pretty intriguing watching Nike shake out, because what you do have, yeah, Nike wants to go higher. So what you have is this. Let me see if this is an ABC up. When we took off topside on June 29th. Look at this. This is amazing, actually. You bring this back. October of 2017, you're at 50 bucks. You go up to 84. Okay, so let me put this on a monthly and see if I can get more clarity. Okay, so here we go. Okay, so A point on this is 22. The B is 68. So you're talking about 46. Your C is 50. That's 96. Okay, let's see. It's just volume 234 million. That's interesting. So it's going to be. It's not an ABC up, but it's going to be a close call. The reason it's going to be a close call is that what you do have is that at the very tip of this, you had 234. You pull back, and you never went to a swing point, then you broke topside again. That's on the monthly. On the daily, it looks like it absolutely wants to go up and test this high that was generated out here on the 21st, meaning last Thursday. Friday? No, Friday. It has some juice up at that high, so I suspect we're going to get up there and test it. Let's go take a look at the gold market. Let's see what we have inside the gold market. So, gold out here today, sideways move, no volume behind the move. You got 188,000 contracts, dead market. You're at 1205. The cool thing is that you're staying at the top of the range. The top of the range, this range here would be approximately the 1205, 1207, right about there. The sellers are lying at the price point of 1218 to 1220, folks. Each time that the gold contract gets up into that level, they sell it away in a huge way. We go take a look at the silver market. Silver's trading right now. Silver's got a bid. Hey, this could get interesting. Yeah, silver's up 15 cents and it's breaking topside. Oh, this is good. Okay. So, silver. And it has the volume. Okay, this is encouraging. Silver's up 15 cents, trading $14.50. And we got back inside higher range. Not the high range, that's for sure. Bottom line, though, this is encouraging. This is saying that the dollar does want to go lower. Silver's caught a bid. And if we go back over to the bond market again for a second, we'll do the TLT, because the TLT is the ETF for the treasuries that are longer than 20 years. The low for this year is 118. The high is 128. 116 rather is the low. And we are at that low. Now, when you take a look at the treasuries, when you take a look at the TLT is also saying that the market is buying bonds, not selling bonds. And that would also be saying that the way the market is reacting right now is that the Powell statement will be dovish. What you have is this. The low in May, which the 30-year was testing, is $116.09. We got down to $116.19. We did that with 13 million shares versus 7 million. So we didn't break the low, but bottom line is that you had volume come down. Well, today it negated that higher volume down. Why? Because you got down into that, and we did 3.5 million, and you rejected it. So it's kind of wild watching this whole thing shake out. Tomorrow, 2 o'clock is going to be here before we know it. The GDX, we take a look at the gold equities inside the gold market. GDX right now is trading $18.82. This is trading sideways. It is inside the larger range, though. Bottom line, once you get inside $18.47, that sets up. It can make a run up to this $19.88. Barrick, of course, Barrick has taken over Rheingold Resources, and what you have is that they both caught a bid. Barrick is off the low of 953. You're trading 1120. Barrick, this was a second-day gap, and it looks to me like this thing is building some cause for higher price. Now, as Barrick moved, you're going to have Rheingold move, because the buyout is 6.128 shares of Barrick for each share of Rheingold Resources. So if you're trading that, what you want to stay really tuned to is that what that ratio is, how that ratio is going, and how close to that ratio both equities are actually trading. I'm going to do this right now because we did this morning. Tommy and I did this morning. And what happened this morning is that when you take the price of Barrick, there we go. Okay, so we take the price of Barrick. Barrick's at 11.21 times 6.128 gets you $68.69. Okay, so I want to see this if you want to have some fun. Now you're at $69.87. Okay, so this morning, so that's trading right now $1.17 over the price that it should be trading. When you look at some of these folks, right, the way that if you decide you want to trade them, and when I say trade them, what you'd be doing, if I was doing this, I would be trading Rheingold. And the reason being is that you'd want to see what the ratio is and how far over the ratio that it's actually going. Because this morning, it seemed it was more than $1.14. When you get used to it, let's say it's been $1.14, $1.20 for 2 or 3 days. Great. What you do then is that every time that it's over it, you can sell it, you're buying it back. Every time it's under it, you're basically buying it and you're selling it as it goes topside. Because those will fluctuate. They will fluctuate. The XAU, the HUI, and that's going to be a good matchup, folks. That's the bottom line. The HUI trading $66.94. That is into its downdraft bar. That bar started at 65.71. That gives it a shot that it wants to go to 69.58. Gold Bugs Index, same setup. Gold Bugs Index, you're off the low here of the 133. You're at 145. The big bar, oh, this is good. Actually, on Gold Bugs Index, this is what we needed. The Gold Bugs Index, oh, 1 second. Yeah, it's $3 into it. So the Gold Bugs Index, the bottom of that bar is 142.30. Top is 149.87. That's saying that you do have a shot to get into that also. Action. There's action out here. Bottom line, what I do expect we're going to see. Let's go over and take a look at Great Panther. Great Panther out here trading 88 cents. The low for the year is 78. The high is 145. And if you're looking to buy that, I'd give it a little bit more. It is pulling back with light volume, there's no doubt, but maybe you can get this at, like, well, 2 pennies. It's not the end of the world. You can start scaling in right now, actually. It's at 88.6, 86.5. 2 pennies is not the end of the world, that's for sure. Stay right there, folks. Come right back. Dow Industrials right now, down 48, NASDAQ up 19, S&P's down 2. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Back, folks. Dow's down 53. NASDAQ is up 18. S&Ps are down 3. Let's go to Square. So Square, you talk about some action underneath it. This is big action, folks. Square is trading up 10%, $9.60. You're at $95.63. They come out with their numbers on the 31st of October, and this is one monster move, man. I mean, it looks to me like we're going to get a big ABC structure on the way. Well, we do have an ABC structure on the way up, and this is what it is. So Square has 24 million shares traded out here today. Your A-point on this is $63.21. That was the low that established on July 31st. So you get 63. You get 92.91 as your B. So you get approximately $29. Your C was the low of yesterday, which was 81. So you're talking about 110, basically $109. A to B equals C to D. It's a big number. And I believe that all that happened with this equity is that you had, well, first let me see how many short positions we have. Oh, well, there's an 8% short position. That'll do some of it. Bottom line is that this was just an analyst upgrade, which is pretty amazing. So Square, so this analyst says it deserves a spot in the FANG Club. So Dan Dooley, let's see who Dan Dooley is. Okay, so Square should be the newest member of the FANG complex. Oh, I see. Norma Instinet wrote to note in clients Tuesday, highlighting the fintech's firm buoyant payment volume as well as its revenue and marketing trends. The analyst, who has a buy rating on the San Francisco-based Square, raised his price by nearly 50% to $125. Similar to FANG stocks that have disrupted traditional markets with massive global Square's fully cohesive solutions and rapid rate of innovation suggests that is en route to disrupt the global payment system. And if we do take a look at the amount of transactions inside Square, what you have is this. 4 years ago, they did 850 million. They will do 1.5 billion this year. Their transaction revenue is growing by 10% a year. Big number. Their software, so they take in 1.9 billion in transaction revenue. They take in 294 million in software and hardware revenue. The software and hardware revenue is growing by 50% a year. Business-wise, they're growing by 10%. Actually, 12% a year. In the United States, they're growing by 18% a year internationally. Now, I just want to look at this as the Visa. So that's who they'd be disrupting if that's going to be the case. And that's impressive, man. Look at this. Okay, so if we bring Visa up, Visa does 20 billion, but when you start looking at their growth is nothing like it, nothing like it. The transaction volume, Visa's growing by 7%, and they're growing by 10.2. when you look at growth in the United States, holy cow, yeah, big difference. Visa's growing by 2.5% a year, no, 2.75% a year, and Square's growing by 12% a year. When you look at international, Visa's growing by 6% a year. They are growing by 22% a year. Yeah, I can see where he's coming from, man. Pretty amazing. Let me look. I want to see what this. So the PE in Visa is 35. Oh, look at this, though. This is sick. The PE in Visa is 35. The PE in Square, folks, is 210. So that means that for every $32, you're making $1 in Visa. For every $210, you're making $1 in Square. It better be growing like that. So you can see, bottom line, if you just follow the matrix of the fundamentals of that, Visa would be a better buy. You know, but guess what? It's just like these companies that can grow by leaps and bounds. People want them because what does happen is that if you're disrupting the business and you're making it very easy, bottom line, whole different ball game. If we go take a look at Amazon right now trading up 35 bucks, and Amazon bottom line is looking to get up and over. It just did it. Actually, Amazon's looking for its highs again. Well, September 5th, yeah. So 2000 was, yeah. We're into the September 5th downdraft and September 6th downdraft. We have lighter volume, but you dug into this bar. That's what it comes down to. The top of this bar is 2007. That's the price. The bottom of that bar was 1935, and right now you're at 1969. Google. Let's go take a look at the Google. See where Google's shaking out here. Google doesn't look to me like it's going to get over the 1186. Right now you're 1185. Google's been laying out here for quite some time. Just doesn't have the juice. The Netflix NFLX, same setup. Netflix is that's a vicious downdraft. There's a seller sitting at Netflix at 385, 385 to 344, and you're at 369 right now. It is a big number. Let's go check in with Tilray and see how that little baby is shaking out. So Tilray, that is the reefer madness that went up in smoke as it traded up to $300 last Wednesday. It's trading $108 right now. Still no juice. You know, when this opened up this morning, it opened up at $119.40. And you got to pay attention. You know, if you the thing that cracked me up coming into work this morning, I'm hearing that Tilray is up, and the bottom line is that what they had done is that they, exported cannabis to Australia. Well, bottom line is that it didn't say how much they exported. It didn't say that someone was buying a lot of it. They said they successfully exported medical cannabis to Australia to distribute to children suffering from epilepsy. The Canadian pot producer will distribute its CBD 100, an oral solution of concentrated cannabinoid extract, to 3 hospitals in the state of Victoria. Bottom line, folks, is that you got to sell a lot of pot and have a lot of patients, and that patients I mean by medical patients, in order to basically get to higher price. This is an equity that only takes in 9.7 million. You know, the more I look at this equity, we're going to have the good, the bad, and the ugly inside of the aspect of these cannabis stocks. You know, when I go over and take a look at Canopy Growth, bottom line, Canopy Growth pushes 25 million a quarter. They expect 91 million next year. And if you go to Canopy Growth's website, by the way, you're going to see they have huge amounts of distribution in lots of countries. It's a real deal. Whole different ball game. Whole different ball game. And I suspect, you know, we're going to see, as I said just a little bit earlier, the good, the bad, and the ugly in all of this. And one of them is going to have to do with the rumors that does the liquor companies come in, do business with them, Does Coca-Cola come in and do business with them? My take is that they're all going to. The real question is going to be, what is the first food company that's going to? And you know what? I'm trying to figure out, like, a chocolate company. A big chocolate company would be the one, no doubt, that could come in. They're selling the same deal. They're selling sugar. They're selling a high. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 64, Nasdaq up 15, S&P's off 4, SBUX. Let's go over to Starbucks. We were talking yesterday. The CEO, he's going to get some shaking, rattling, rolling. He's going to be laying off some people, and it looks like one of the first ones in that news conference. Well, no, the News Dispatch yesterday was saying that he is going to lay off bottom line management also. It's interesting here. So the head of this just came across the tape that the Starbucks coffee trading arm has left. The head of Starbucks coffee trading arm has left the company as the world's largest coffee chain, struggles to reverse stagnant sales and lure new customers. Coleman Cuff, managing director of Starbucks trading company, left the trading arm in Switzerland. Asked not to be named. Cuff handled $1.5 billion in green coffee, cocoa, and tea purchases. Starbucks is trying to revive sales in the saturated U.S. market while it bets in China. The coffee giant, once considered at the forefront of trends in the market, has seen increasing competition from micro roasters, which are attracting the new hipster consumer, who wants to know where the coffee come from and more control over how it's brewed. There's no doubt, man. You know, I'll tell you, folks. You know, in St. Pete's a growing city. It's an incredible city, and you know, we have a lot of coffee places. And when they were opening up, it was like, oh man, I wouldn't want to go against Starbucks. Well, guess what? They were right, because these coffee places are cooler than Starbucks. Their coffee, in a lot of cases, are better than Starbucks, and the environment is definitely better. It's a whole different ball game. It's almost like when Starbucks first started, because I remember Starbucks very well when it first started out in Seattle. And yeah, they've been, they are going to have to start selling weed inside coffee in order to get the sales up. Wonder how that works. Yeah, we're going to probably see that. I guess when it's recreational, that goes. Stay right there, folks. We are going to have numbers after the closeout here. Bottom line, you got sideways market. Market's waiting for Powell tomorrow, 2 o'clock. Stay right there, folks. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Manifest your true intentions. Regardless of what language you speak, your intent will be manifest through the word. What you dream, what you feel, and what you really are will be manifested through what? To what you say each and every day. Market wise, let's take a look at it out here. We have the Dow Industrial closed down 69, NASDAQ up 14, S&P's down 4.5. Bottom line, folks, you really get a sideways market out here. Let's go take a look at the S&P's first. So we take a look at the SPY. What you're going to see inside the SPY, you basically went sideways, 40 million shares. Looks to me like this high that was generated out here last Thursday wants to get tested once again. That high would be 293.94. NDX 100, different animal. Now, we had yesterday the NDX 100, bottom line, rejected lower price, had lighter volume, went topside. Today, you are topside. You're at 184.14, light volume. I suspect the NDX 100 is still going to have a hard time getting into this September 5th level. That's 185.55. So you're talking about $1.20 higher, and that's 45 million shares. Small caps. We go take a look at the small caps out here. The IWM, what you have inside the small caps, the Russell 2000, also rejected higher price. Anything inside $170.20 inside the IWM, folks, is the lower range. And these small caps are setting up. They look to me like they want to actually not only go down, but get down into this $162 level. What you had out here, the high is on the 31st of August. That high, 173.39, came off that high 2 separate times with some good volume. The small caps have been in this consolidation since June 20th. So we're talking about 4 months at a high-end consolidation. Gold contract. What do we have with gold? Bottom line, folks, gold needs a bid. Yeah, we have with the gold contract. You had sideways movement out here today. We did, we're up $1. You did 191,000 contracts. Inside day, what gold is doing, it's staying at the higher end of its range. I do expect what we're going to see is that we're going to make another additional run for the $1,218 to $1,220, and we'll see how it shakes out. Each time up at that level, you know, we've got a couple days of good buying, no follow through, and each and every time that it does get up into that level, they sell it down. They sell it down pretty hard. Now, that being said, what it has not done since going all the way back to the low that it made in August 16th, it hasn't broken any lower swings. You know, so you're off that low of 1167. Your next low out here, which was it took off like a rocket ship. That was on the 24th of June. We went from 1189 to 1215. Bottom line, we'll see how this shakes out. Now, what we did get out here today is this. Silver. Silver took off. And we'll see if that's an indication of also the aspect of what Powell's going to say tomorrow. And what you have inside the silver market, silver traded up 1.1%, 15 cents. Silver is always highly volatile on the way up as well as the way down. What we do have out here, there's buyers. You did 94,000 contracts. That's good contract volume. You dug into the high volume swing bar. We are at almost at the top of it. The bottom of that swing bar was $14.03. The top of it is $14.50. Bottom line, you're pushing into it. We have juice behind the move. It is in its higher trading range right now by 5 pennies. When I say higher trading range, not a high trading range, but bottom line, you get between the low that was established out here on the 11th of September, which is 1420, up to the highs of 1755 3 months ago, you actually got we actually get 3 trading ranges. That's how that baby is set up. Notes and bonds, bottom line is that they need a bid. And we'll see the note and bond market, that baby is definitely waiting for what Powell is going to say tomorrow morning. What we did have out here is that we had the 10-year get down to 118.11. We closed 1 tick inside, so you do have a rejection of price with lighter volume. You know, we'll see whether they can get anything going. 30-year is a better setup. Now, what's intriguing about the 30-year, and this is what the differential is that the 30-year actually went down to its May swing low. We did reject it. We got down to a lower low today, 139.17. You had light volume. You only had 267,000 contracts. And then you closed inside the 139.23. We closed inside that by 8 ticks, which is a good number. So coming into the Fed fund tomorrow, we'll see how that shakes out. That's telling me, though, there's going to be a dovish statement. And the TLT also sets up like that. What the TLT did is that the TLT is the U.S. Treasuries 20 plus. That means that all the equities that are securities, rather, that are inside the TLT have a expiration date of 20 years or longer. And what they did, they got down to $116.40. They did reject the low. Bottom line, the rejection was on tremendously lighter volume. I like how that was set up. We did 6.6 million versus 13.38. That's a decent number. And then if we just finish it up with the good old King Dollar, what you're going to see with King Dollar is this. King Dollar tried to get to a higher high. We went to 93,960. You had light volume and couldn't hold price. So King Dollar is still building cause to get into this area of the monster strength that it had on the 14th of June. The top of that was 93,995. The bottom was 92,500. GE's in big trouble, folks. They're selling down GE. They're getting out lock, stock, and barrel. GE did 132 million shares out here. Monster volume. You're breaking B points. You're breaking them with volume. You're into the low now that was established out here in 2009. The high of that low was 1135. That low, folks, is 572. If we come down another buck, guess what? Your probability goes much higher. You're going to get down to the bottom of it, and the real question is going to be, does it even hold the bottom of it? Pretty intense, man. GE is not the GE that we were growing up with, that's for sure. Stay right there, folks. We got our man, Mr. Jason Path, coming up next. Jason kicks us off every trading day right here at TFNN. Morning market kickoff, 8:30 in the morning. Jason and I coming right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Does the current market volatility continue to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow finished down 69, NASDAQ up 14, S&P's down 4.5. Let's go over and take a look at Nike. Nike just come out with numbers, folks. Nike closed at $84.79. Right now, you're trading at $81.20. So you're down $3.50. Numbers go like this. The Earnings per share estimate was 63 cents. They made 67. Revenue estimate was 9.94 billion. They made 9.9 billion. Bottom line is, looks like inside here they're talking about their gross margin. Let's see. Yeah, it looks like the gross margin, $3. $3 is not going to kill Nike, particularly because that thing has been basically on a tear top side. As you come over to our website at TFNN, folks, we got a brand new website, great website, okay? Check it out. Please check it out at TFNN. Really easy to use on their phone. And what you're going to see, featured content. Right, the first one right there, Jason Path, the quantitative edge. Check it out. Jason kicks us off every trading day right here at TFNN, 8:30 to 9 o'clock market kickoff. He has an outstanding newsletter. You can subscribe to this newsletter. It comes with a 30-day money-back guarantee, whether you get a month, 6 months, or a year. You want a great newsletter, folks? Check it out right at TFNN. Jason, what's going on, brother?
Not much, man. How are you?
Doing good, man. Doing good.
Yeah. Markets are moving, man. It's a
Market's
big week.
moving. We're waiting for Powell. I mean, it looks like, I mean, you know, when you look at these interest rates, you look at these bonds, it's like, you look at the dollar, look at the metals, it's like they're all sitting there waiting. Like, what are you going to do?
Yeah, just waiting. And, you know, the crazy thing, and, you know, the Fed is so much more, I don't know if transparent's the word, right, but they telegraph, you know, there's so much more clarity going into a Fed meeting than there used to be, you know, going back a couple of decades, right?
There's no doubt. There's no doubt.
It's a totally different world, but they still have the same anticipation, still have the same, you know, Herculean amounts of money waiting to be moved as soon as we start to get some drips of an indication. And, you know, folks will be, you know, looking at the dot plot, you know, within seconds and moving, you know, significant amounts of money. And, you know, so, yeah, you know, doing the same thing I'm doing. I'm just waiting, too. So it'll be interesting. I think the dollar is certainly set up for a move. You know, I don't know the timing if it seems a bit more hawkish than folks expected. I don't know if it just takes off, but I think it resumes higher. But if there's any dovish tilt, I mean, it is set up for a pretty precipitous fall back to previous support. So we should know by the end of the week if which track we're on, if not, you know, by close tomorrow.
It's wild. Exactly, you know, what Jason's saying, folks, is that I happen to really like Powell. I think he's really transparent, and I like how he talks because you can understand him. And that being said, it's like, wow, you know, just as you said, we're still waiting. Like, okay, we understand what you've said, and what he said specifically, folks, he's told everyone, listen, man, we're going up in rates, we're going to normalize rates. You know, but that being said, the real question is going to be, as that happens, does he want to take away the punch bowl too soon?
Right.
And that's what none of us know, right? I mean, that's the reality, you know?
Yeah, you know, and an interesting thing, this is a bit of a, you know, nuanced detail here, but, you know, you wonder if they regret the decision to move forward with something like the dot plot, right? Because so much will be traded just based on that future trajectory.
Right.
The dot plot in the history of the Fed is relatively new, again, in the spirit of transparency to the markets, but, you know, one dot moves in a more hawkish or dovish direction now. And it's kind of a superfluous, you know, just release that they give markets. But, you know, I think the dot plot will be the key tomorrow, and folks are really trying to handicap the future trajectory. And, you know, if that thing shades one way or the other, again, I think we're set up for a pretty significant move in the dollar.
And
we'll
folks,
see.
if you happen to be watching Tiger TV, I just put that dot plot up. And it's quite a trajectory from where we are right now going out to 2020. And then that starts going down. So it's like, okay, you know, yeah, you're going to squeeze us till they can't get squeezed anymore, then they know they're going to have to back down. Isn't that intriguing, man, right? Yeah.
Yeah, and you know, hawks and doves have cause either way. You've got strong data, you got the trade uncertainty. So, you know, it's going to be a fascinating meeting. And then we'll start talking about the next one and have 90 days to tee that up, because obviously that's the second rate hike of the back half of the year, and been a lot of speculation about that too.
You know what the scary thing is here? Actually, looking at this dot plot. So as I'm putting the cursor over these dots, so if I go out to, you know, just 2019, you know, you get the target rate of 3.125. You go out to 2020, and this baby is at 3.375. And right now, folks, we're at 2 to 2 point. No, we're 1.75 to 2. We're going to go up from 2 to 2.25.
Yeah, could be 250 by the end of the year. That's right. Yeah, and you've got Europe hiking. You know, Europe's has been, you know, with dramatically lower rates recently as well. So you're going to have Europe hiking at the same time. Just a different. We haven't been there in decades.
Right. And you know, if you take a look at the euro, it's just the reverse of the dollar, and it's all about June 14th. This June 14th was the monster day. The euro got crushed and the dollar went to the moon. So
that's right.
We'll see where this whole baby goes. So here, let's talk, you know, natural gas, man. You know, bottom line is that it's still hot in Florida. But bottom line is that we had the first day of fall Monday, I believe, right? Or maybe yesterday.
Right.
We get natural gas running out here at $3.07. That's quite a move, man.
That's steep, you know. And
yeah.
I've been fairly bullish on natural gas lately, and now the question is it too much too soon? You know, because we are entering shoulder season where we'll see demand drop as we get between heating and cooling. So, you know, it's about your timing as a trader. Short term, you know, resistance was previously, in my estimation, around 304, 305, really around 304.9. We've broken through and pretty sharply today. This is a very sleepy market not too long ago. You look at the trend in September, we had a mild double bottom right at the beginning, and then it's taken off.
That thing looks to me like it's going to go to 330, man. This is, you know, it didn't have much juice out there today, folks, but what you have out of the past 6 days, the last 6 days, 4 of them were on wide, out of 6 of them, 4 of them on wide price spread, man. That's a lot of buying. That is, they move that market quick, man. And now, oil. We're going to get these oil numbers out. Man, so let's talk about the oil. I was listening to your program this morning. I mean, it seems that, Iraq is having, you know, basically, well, not a squeeze, but the bottom line is that if all that Iraq oil is off the market, well, I guess when I was hearing yesterday, the Indians, the country of India, said that they only can do it halfway. Is that what's going on?
Reuters reported they can only take it down by half over the next couple of months.
Okay.
Sanctions haven't quite gone into effect yet. You know, in a side kind of currency story, reported that the Iranians let him pay in rupees, but it's a different segment.
Yeah, I was wondering with that. That's pretty intense, man.
And there was some reporting in the Journal today. I haven't unpacked it fully. I was going to prepare for the show in the morning, but apparently there's some talk, and again, this is all reporting in the Journal. I don't have confirmation that Europe is even talking about setting up some type of special vehicle to be able to allow folks to continue to do business on some level with Iran.
I saw this go through Bloomberg today too. Yes.
Yeah, so, you know, I think what everybody agrees on is the Iranian situation is what has driven price higher. You know, you could be on either side of the fence, but this has added quite a premium to oil, and there's a significant move afoot to try and reverse that best they can.
Totally. Stay right there, folks. Jason and I are coming right back. We're going to come back with the oil numbers. The API is coming out in about 2 minutes. Come right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Talking with our man, Mr. Jason Path, who kicks us off every trading day, 8:30 in the morning. And as you come over to our website at TFNN, right under featured content, you're going to see Jason's newsletter, The Quantitative Edge. Jason is a data expert in an extraordinary way. If you'd like to test drive this, all you do is you hit that subscribe button. Bottom line, it comes with a 30-day money-back guarantee, whether you're getting a month, 6 months, or a year. Let's talk about your newsletter a little. So can you tell the folks, exactly what's in the newsletter?
Yeah, so first of all, the first thing to know is we take a fairly wide global macro approach to markets. So we are looking for opportunities. So we have a series of models, where we scan different asset classes, different indices, really looking for opportunities. And then where we see potential opportunity, we have a fundamental outlook, and we're very transparent. We've got a grid where we track, where we are with 10 to 12 large asset classes at any given time. And then we'll ingest tremendous amounts of data. We'll match that with our fundamental experience and insight. We will model, predict, forecast where we think certain markets are headed. We use relative value, where we'll use a lot of ratios and forecast based on historical correlations or historical movements in price based on other variables that we're seeing. So a lot of quantitative modeling, a lot of data, a lot of education. We like just to share what we know and teach about markets and let folks make their own viewpoint. And then we're have a pretty robust set of trade recommendations. We track those weekly. We track our performance weekly. My trades are fully disclosed there. I show you my portfolio, exactly where we at. We're up about 25% over the last 6 weeks. Fully transparent with that.
So how did you start getting into the data business?
Yeah, so it was really through Forex markets. So I started trading Forex back when Forex was electronically able to be traded years ago, and was just looking for an edge.
We had a lot of different currencies, right? Yeah,
that's right. All right. And so just looking for an edge, and really the first strategy I hit on looking at the data was looking for pockets. It was still a strategy we employ today, looking for pockets of volatility where markets are coiling, and looking for a breakout. And that's one of the things we continue to do in the letter. We are looking for large, what you would call asymmetric moves, where a market is exhibiting behavior that it's about to have a jump, some type of jump condition. Then we'll use a forecast model overlay to try and see which direction that jump condition might move based on a coiling and volatility. For instance, and again, just in the spirit of transparency here, we saw pretty good coiling in REITs. With our fundamental outlook, and I'm just using this as an example of what we do. So our fundamental outlook is interest rates are rising. Our relative value model said rates are overpriced. based on where we are with respect to rates. And we saw a coiling of volatility and a potential jump condition moving. Put out the newsletter over the weekend, first thing Monday morning, and sure enough, REITs took a pretty good hit yesterday. It doesn't always work that way, as well as I do. We're humbled by markets every day, but we're looking for jump conditions that match our fundamental insight, and we'll overlay a forecast of where we think that's headed. So,
pretty cool, man.
A lot of data, a lot of education. Again, we'll talk about things that are on our radar that we don't necessarily have a trade in yet, but just sharing, disclosing all of the information, all the data. We pull it from 30 to 40 global sources a day at a minimum. We'll mix and match and model it out and see where markets might be moving, man.
So you get those servers moving, man.
That's right, man.
Thank God for Amazon Cloud, right? Or some cloud, right?
That's right. Oh, yeah, all on AWS. And incidentally, if somebody is more technically inclined, for the other kind of data geeks out there, I put our code out on GitHub, which is our code repository. Again, full transparency.
That's
if somebody
cool,
wants
man.
to email me and ask me, there's no black box here. There's not some wizardry that I'll pretend that nobody has access to. I'll show you the code. I'll tell you how the model's built, fully transparent with the data sets. Happy to send that to anybody. Transparency is really key for us. And we'll show you folks, not just what we're trading, but why, and we'll track how we do.
Now, GitHub, does it Microsoft buy them? Who bought? Yeah, right?
So it's really a social. It's called a social network for programmers, but it's really where you store code and share it with other folks who are or code or websites or what have you. So
that's so cool, man. So we get the first number coming out. API rose 2.9 million barrels. So it takes a few minutes to get the second one out, folks. It did back down oil a bit, but nothing heavy.
We're down about a quarter. Yeah. That's about, I'm working on the outlook for the morning. We put out our oil inventory outlook on Wednesday mornings, pretty close last week. But yeah, small build, mainly based on as we enter, seasonal maintenance period in the refineries. We're pretty balanced on inputs and outputs with respect to the domestic oil market, but taking some of that capacity offline with seasonal maintenance looks like we'll have a slight build this week potentially, and API seems to indicate that too. So
it's going to be really interesting, man, if, oil really takes off topside. Here, let me get the rest of these numbers for you. So we just got the rest of the numbers. Cushing had a build of 260,000. Gasoline was a build of 949,000. Distilled was a draw of 944. It's kind of flat, huh? Yeah.
Yeah. I mean, the real underreported story is the gas inventory continues we're well beyond now the 5-year average and historical levels. So we continue to build in gas. Obviously, that's not impacting markets too much, but at some point, that has to be reconciled. So, but yeah, just here to the earlier conversation, you talked about if oil takes off. With the premium on the Iranian deal, Macron had a quote out today. We were talking about the Indian situation.
Okay.
If the current administration heading into an election, and this is just, a potential scenario that plays out, issues some kind of waiver or 30-day stay, make no mistake, the Iranians are filling tankers today. They call it floating storage. They're out to sea. When that oil comes back on the market, this is what happened previously. They were under sanction previously, and then they were allowed to resell oil. They're just filling tankers that are floating. That oil comes back on the market, we'll see a pretty quick collapsing market. Wow. Obviously, that takes reconciliation of the political situation.
Yeah.
But I just continue to believe, with every world leader telling Trump, you're costing $10 to $15 a barrel of oil.
Right.
With the Iranians filling tankers that are out at sea, all we have to see is a 30, 60-day waiver. You'll see a pretty good flood of supply hit the market and a pretty sharp move in price. A lot to happen before we get there, but the Iranian situation, folks are trading as if that's just baked in the cake and that's just set in stone. I think that's as unpredictable as any other geopolitical story we have right now, based on the fact that it's costing people real money and we're heading into an election in the United States. The game theory angles are endless.
I agree. It's the pocketbook issue, man. The pocketbook issue, and the economy is going like gangbusters. And what you can see is that, we all use gasoline every day. And if that gasoline starts costing $80 to $100 to fill up again, which it did, 3 or 4 years ago, everyone's going to be like, what just happened here, man? What happened to my $40 fill up, right?
Yeah, and a 90-day reprieve for Iran drops gas overnight.
Yeah, big time.
Speaking. We'll see.
You got to love it, man. Well, listen, folks, every trading day here, he kicks us off. 8:30 in the morning. You want a huge amount of information in 30 minutes. Great way to start the day. Take us anywhere. Right on your cell phone, folks. Check out our new website. It's TFNN.com. Really easy to use. Hit the Listen Live button. You're off to the races. Hit the featured content, Quantitative Edge, 30-day money-back guarantee. Jason, you have a great night, safe night. Of course, we look forward to the show tomorrow morning.
Can't wait, man. Take care.
All right. Have a great one, man. Have a safe one. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's go over to KB Home. KB Home, low for the year is $20. The high is $38. It closed at $25.29. This is trading right now at $26.55. So you get about $1.50, $1.25 up. Let's see what they have to say. So earnings on KB Home, the estimate had been 77 cents. They made 87. Revenue estimate had been $1.26 billion. They made $1.2 billion. Now, that's kind of intriguing. You know, they made more money to the bottom line, but bottom line is that it looks like they took in $600,000 less. But that being said, the market's pushing them higher. So let's see what they have to say. So they had net orders of a plus of 3%. change orders in value added another 5%. They had a cancellation rate. I don't know if that's a big cancellation rate, 26%. Their backlog went down. That's not that right. So the backlog is minus 4%. Their gross margin, oh, that's a good gross margin, 23.1%. That's a good gross margin. The revenue estimate had been this is for the third quarter revenue going forward now. It had been 1.23 to 1.29. They're still kind of at that 1.23. They brought the top number down to 1.26. Earnings per share, they were at 73 cents to 85. Bottom line is that they did blow that one away. They got over the top on that one. Let's go over to Nike. Well, hey, actually, let's just bring this chart up because KB actually, folks, was the weakest home builder out there. Bottom line is that KB never went back to its highs in 2005, and that's what that was all about, is that they never took their stop on the way down. They never sold any land. Huge mistake. Bottom line is that, you had Lennar basically selling hand over fist on the way down their land. They sold it at huge losses, but guess what ended up happening with Lennar? So here, if we take a look at it, let me pull this back, let's see closer. So what you do have, now this is what's pretty cool with KB. KB has a high volume high at 38. So that's saying it's going back to 38. The KB had gone back to its breakout area from September of 2017. It did it with light volume. This is a good setup, man. This is saying housing is not over. Bottom line, you get a high volume high. You got to love it out there. Let's go to Lennar now. So Lennar, the differential in Lennar is this. Lennar, bottom line, sold its land on the way down, took a beating, but yet that beating was very minimal because what ended up happening is that it bought it back at pennies on the dollar. So the high of Lennar in 2005 is $68. Well, this baby hit $63.52 in February. What we're going to see out here, I suspect, let's pull this. Lennar did the same thing. We come back to a breakout area in March of 2017, did it with light volume. You've rejected lower price. This is going to be a good setup. When's Lennar coming out with numbers? Okay, October 3rd. Lennar's coming up next week. So that's going to be something to watch, particularly because we know that interest rates are going up, and that affects real estate in a big way. Now it hasn't got to the point that people are balking. What has happened is that the prices, however, if you look at the S&P Core Schiller Index, what you will see is that that is slowing down because of the price is getting higher, and, bottom line, the affordability issue is a big issue. And I suspect that's going to continue. The reason that's going to continue is that, guess what, folks? Wood's up, steel's up, copper's up. Bottom line is that building is expensive, and I don't see it get any cheaper. If we go take a look at the Nike came out with its numbers. Nike closed at $84.79. Nike's trading at $82.78, so you're down $2. $2 is nothing to Nike. Nike still wants higher price. In fact, Nike's looks like it's a big ABC structure on the way up. Let's go see what they have to say, how they've been moving around. So the earnings per share, the estimate was 63 cents. They made 67. Revenue, the estimate was $9.94 billion. They made $9.9 billion. Little shot. It looks like, let me find this. I believe it's going to be the gross margin. Yeah, gross margin was 44.2%. It's not a bad gross margin. You're talking about 44 cents on every dollar coming in. It's a big number. Let's see what we have here. Okay, so Nike's gross margin narrowly missed estimates, a sign that investors are concerned about the company's profitability and higher production costs. Gross margins are particularly important because Nike's biggest longer-term focus is lessening the company's reliance on retail partners by strengthening sales via its own channels. Sales made on Nike's website and app have better margins and give the brand more control over its product. I can tell you, folks, if you haven't bought Nikes right off Nike, it's a great way of doing it. What you can do is this. Okay, you're going to crack up, man. I got to tell you. So I get Nike sneakers, and what do you think's on the back of them? Tiger Tom. You can put whatever you want on them. You can make your own sneakers. The color, meaning the sole, the front, the back, the whole ball of wax. And that doesn't cost you anything. Your bottom line is you go on there and they make it really easy. You go click, 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 click. It's done. Bang. You get them delivered. They come, I don't know, I forget, it was a week or whatever it is. Bottom line, I suspect what you're going to see out here is that there's going to be more folks that just go right to Nike and make them. Because guess what? You can. Some of the higher volume equities out here. This is what we have today. You had General Electric was a leader. General Electric, poor General Electric. That's 1127. The high that it's been going after for quite some time, we're at it. It was 1135. We hit this today, and you smacked it with volume, a monster volume. We did 132 million shares. So what you're going to see out here with GE, this is a problem child in an incredible way. What's blowing my mind with GE in particular is that they keep paying a dividend. They don't have any money, man. They're paying a dividend, and this is like, you know, it's like, really? And, you know, this is a legacy issue that they have. It's a big number. The low $5.72 is sticking out like a sore thumb. And now what has happened is this. This is what's so scary about GE. You know, it didn't have to go to the low of the high because the volume was so tremendous. Now it's not getting into that bar. And what you have here is this, is that we broke down now, and the volume is extraordinary. So we got an ABC structure on the way down. What it's saying is that the price projection is approximately 1050. Now that's if it's an ABC structure on the way down on a weekly basis. If I put this on a monthly basis and this volume continues to explode, it is going to be a huge problem because right now we are at, oh man, it can do it. So check this out. This is pretty sick. We're right now almost at 1 billion shares. And it only needs, we can't beat 1 billion. We're at 200, I think we're at 250,000. No, oh my God, yeah, we're almost at 300,000. Okay, you're almost at 300,000. And bottom line, if we're only 2 days into the week, if this trades like this the rest of the week, you're going to have an ABC structure on the way down that we just may have something worse on GE because on a monthly basis, if in fact we get this volume, GE is no longer going to be basically GE. First, it's out of the Dow. Longest stock that stayed in the Dow. They kicked them out. Next, they just might kick them to the gutter. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well, with good liquidity in trading and strong fundamentals. While remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So tomorrow morning, folks, I'm Mr. Jason Path. He is kicking us off 8:30. Don't forget, great show every trading day. Right on your cell phone, folks. Just go to TFNN.com. Check out our new site. Hope you're going to like it. We do appreciate you growling and prowling with us out here. And, you know, we heard from Carlos this morning. If you know Carlos, great guy. Got sick. Bottom line, he's strong as an ox right now. It was great hearing from if you're out there, Carlos, we love you, man. It's so glad you called, gave us some feedback. Pretty intense, man. You know, when you get really sick like that, you have to, you know, when I end the program, folks, and I say that everything is inside you and grab it, do it. Because the bottom line is you have nothing to lose. That's the reality. There's absolutely nothing to lose. So, you know, life is a mystery to be lived, not a problem to be solved. You know, so none of us actually know how it works, right? What I do know is this, is that we're more powerful than we know. Whatever the white light is, real energy is, whatever all of us together are, is very powerful. The positive thought aspect is there. Now, we're not Einstein, so, you know, maybe if we get a couple Einsteins around, we can figure that out. But bottom line, it's a cool deal. We do appreciate the growling and prowling with us out here. Now, tomorrow, we get the Fed at 2 o'clock. You get notes, we get bonds, we get the dollar, we get metals. They're all waiting for the Federal Reserve Powell to say, okay, are we hawkish or are we dovish? It looks to me that it's going to be dovish. The reason being is that it looks to me like the S&P wants to test the high. So if it's dovish, bottom line, that should test the high. If it's dovish, the dollar should be testing the 92,500. If it's dovish, the bonds, the 30-year came off the lows today of May, rejected lower price. The 10-year is dicey. The 10-year, we're almost at the highs of the year. Right now, the 10-year yield, folks, is at 3.09. So the 10-year hasn't told us much. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Everything you need is right inside you. Go to blast with it, folks. Look forward to speaking to right back here. Join Jason, 8:30 in the morning. Wow! Go get him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.